Welcome back to the channel. In this video, we're going to go over Tesla TSLA. Uh, so we we had a nice run, you know, about 80% run back to where. So we basically came right back to where it started dropping. And one thing that really worries me is that this is the volume profile, and it it stalled right at these levels where there's not a lot of volume, right? And one thing that you need to be cautious is that we have a lot of resistance here too, a lot of resistance. So you have to be aware that there might be some kind of a pullback. Don't be surprised if it pulls back all the way to 145 after the Federal Reserve. Because if you see every every run up after a drop, so let's say here, uh, this drop ran up, it retraced about 18%. And then look at here, ran up, retraced about 15%. Same thing here, ran up, retraced about 15%. So you you want to proceed with caution. Like you don't want to just blindly buy it in because there is a possibility that this will pull back and fill this gap right here at 145 next week. It can fall back as fast as it went up. There's no doubt about that. And but another thing that I do really want to uh, uh, mention is that there is a strong possibility that this can fall in these areas and retest the 65 level. And and I know this might not be a popular view on this stock, but the thing is, if you look at the volume profile, you have the POC at around $24, 22, and you then there's not a lot of volume right here. So if there is a catalyst, right, for people to uh, sell stocks again, then it's very possible that this could come right back down to the $64 level by March, right? And uh, that's something that you want to be aware of, right? Uh, if not, if not, this can be something along uh, along the line of just revaluation, right? Because there are a lot of stocks that are still overvalued compared to historical numbers, right? If you look at P/E ratio, Tesla right now currently is at about 60. Yes, they might have a lot of growth in the future, but the thing is, the way P/E ratio works at 18 is that, after you price in all the risk and reward, 18 kind of like is the perfect number, right? Think about that. For example, let's say you want to buy a restaurant and then you go check out a restaurant and that restaurant is making, let's say, $10,000 profit every single year, right? How much would you offer that company? Are you gonna pay them 18 times more than what they're making, hoping that you can maybe improve profits and maybe hope that you can hold the company longer? Or would like, for example, like let's say, would you pay him more? Would you pay him 50 times their profit? No, right? That's exactly what PE ratio is. 18, that's why 18 is like the golden number. That's what a lot of people like because it's just after you factor in all the risk and everything else, then 18 seems to be a very, very good number, right? For uh, a lot of people who wants to buy businesses. So, but anyways, you know, there are a lot of companies that are still overvalued. So you want to be aware of that. And then there comes Federal Reserve. We have no idea what they're going to do, but there's a possibility that uh, we could have a crash, very, very strong pullback on Wednesday, because a lot of people are expecting the Federal Reserve to raise a quarter. Everything is already priced in. But if they come out and do zero point 0.5, if they do 50 basis point, uh, watch out because there's going to be a lot of sell-off in the market because people are still fighting the Fed, right? And Federal Reserve is kind of tired of people just not trusting them, and this is their only chance to uh, prove it. And I think there's a chance that he come out and do 50 basis point. And if that is the case, watch out because you will likely go back right back down to the $130 or maybe even lower, all the way to about $120. So, but anyways, uh, I am expecting a pullback, maybe 10-15% pullback, and then we will see where it goes from here because as I mentioned, every big bounce that we had more than 10% pullback. This was 53% bounce. This was 65. By far, this is the biggest as far as percentage goes. I think this is like 80%. Yeah, about 77%. So possibility it will pull back. Very probable that it will pull back maybe 10-15%. So look out for that. And yeah, here you go. This is, why prices came down so fast is that there's not a lot of volume here. The stock really, if you look at it, you have a declining volume right throughout this time, declining volume, and the stock prices have been going up, right? That's why you see in these areas there's not much volume. If this is the case, like I said, this looks more like a D shape. If that is the case, it's highly likely that we will have one more final crash and then bounce again. So I just want you guys to be cautioned because, you know, as a lot of people are just blindly buying in, but they don't see these resistance. There's a lot of resistance that this stock has to overcome. If the price ever fall back, oops, below 167.31, watch out because there, it will fill the gap. If not, maybe dip right back down to the $120 range. So that is my take on Tesla. Trade safe.